Taking a look at how tariffs affect currency prices and exchange rates, Pete.
How topical.
So much going on.
You're not like a secret Doge guy, are you?
Okay. I am not a secret Doge agent, but I am here to help explain. Over the last 2 years, Pete, we've done so much explaining of how inflation and interest rates can affect currency prices and exchange rates and the whole dynamic of not only just the forex market, but all markets. And now, as you and I know, the one thing you can count on with the market is you don't know what's going to be moving the market in the future. But we do know right now it's been tariffs, not so much the interest rate action or inflation numbers or anything like that. But first, let's take a look at how exchange rates work. Exchange rates or forex prices, same thing as for our purposes here today. They fluctuate based on relative supply and demand dynamics between two currencies. Taking a look at US dollar, Canadian dollar, you can see here the exchange rate for the amount of Canadian dollars you'd get for a US dollar going between, in the last year or so, 135 up to a price extreme there on the upside of 148. Just really quickly, Pete, what is some basic supply and demand dynamics that move a forex pair like this, U.S. dollar and Canadian dollar, one way or the other?
Sure. Rate differentials, both nominal, which is the rate differential at this time, and the expected direction of travel of that rate differential. The supply and demand of goods being exchanged between the countries and the value of those goods, whether that be, from what I understand, much of the upper Northeast is completely dependent on Canada for not just crude oil, but for diesel fuel, for gasoline, all of it. So it's that trade back and forth and that relative balance of trade.
Well, and you have done, for me, you've made this so clear, which is, is there a greater demand for Canadian dollars? And if so, then this pair here, US dollars versus Canadian dollars, might move lower. The Canadian dollar might strengthen in this scenario. And to your example there, with the interest rate differential, if Canadian interest rates were moving higher than US interest rates, there would maybe be more demand for Canadian dollars to invest at a higher interest rate. Or the other example you use, if, the Northeast is dependent on Canada for oil or whatever, if the U.S. is importing oil from Canada, then there is inherent demand for Canadian dollars to pay for that oil. And vice versa on all of those things. Keep in mind, this is a relative supply and demand dynamic when you're looking at exchange rates. Now let's throw tariffs into this. Tariffs can greatly disincentivize imports from the region witnessing the tariff, which can hamper that currency's demand. For example, the U.S. accounted for 75.9% of Canadian exports in 2024, amounting to an estimated about $350 billion. The entire Canadian GDP was $2.5 trillion in 2024, so a big chunk of product coming out of Canada. A 25% tariff from the U.S. on Canada could greatly diminish Canadian production and the demand for Canadian dollars. Hence, that chart that we just saw, if the U.S. is going to put tariffs on Canada, the demand for that Canadian dollar might soften.
Yeah, absolutely. And on the other side of that coin, the Canadians put tariffs on U.S. goods. The demand for those U.S. dollars in Canada shrinks commensurately. Yeah.
So there's your example. Now let's get into a real world example of some of this stuff playing out, because we've had it's no matter what you think about Trump or what's going on, what is really nice is the
get caught
fact
up in the politics. We're traders, and that's the joy of this. We all have our political views, but within this, we're getting markets. We look for opportunity and volatility. This is great. Let's not tie our mass to a political agenda. It doesn't mean we all don't have an opinion. We all don't care. But that's not what our job is. And our job right now is to find opportunity.
Well, even outside of trading, if our job right now is explaining how tariffs affect exchange rates, what's really nice is that we had the head fake of we're going to put these tariffs in, and then they didn't put them in, and now they may finally be putting them in. So as an example, you get to see actually exactly how much this tariff was potentially worth, because this US dollar, Canadian dollar market went from around 144 all the way up to close to 148, which is a big move for an exchange rate or a currency market. And then the tariffs were delayed, came all the way back to where it was trading beforehand. And now it looks like those tariffs might be put back in place. And so you get to see this stuff play out live once again with these exchange rates. Tariffs can often be interpreted as strong for the region imposing them and weak for the one receiving those tariffs. Now, the question becomes, how long do these tariffs last? Of course, that can be, like we just saw in that example, days. It can
There's
be.
been steel tariffs that have been put on the Chinese and the Japanese for 20 years. So it's not, again, to say that, well, this seems so cataclysmic, it's just a bluff. The market's interpreting my impression is the market's saying there's a finite timeline to these. We don't know that.
Exactly right. And you go back to the late 1800s, early 1900s, and for about 50, 60 years there, that this was the main way that the U.S. conducted business in terms of preserving U.S. businesses, and also keeping in mind that Trump did introduce tariffs in his first administration, which have remained throughout the Biden administration.
Absolutely.
And so, again, but that is what spurs on the volatility and opportunity in a market like forex, is the unknown. If we all knew, oh, we put these tariffs in and they're only going to last 30 days and then they're going to be taken out, the market probably wouldn't really have moved at all. But you can see here on the monthly chart, this US dollar CAD market is right there at extremes going back to 2003. We'll see what happens from here, Pete. But that's how tariffs affect your currency prices and exchange rates.
You know, that was a great walkthrough of a solid example, and it doesn't. You can go down this rabbit hole and get lost in macro and numbers, and it doesn't get you any further in making good trading decisions. It's a great piece of content.
Awesome.